Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies' SOFI stock, we're talking about MULN Automotive's MULN stock, then we're going to go over and talk about Amazon's AMZN stock, and then lastly, we're going to sum up this video with Netflix NFLX stock. So for Sofi Technologies, we're going to be talking about the potential for a reverse stock split, where the stock is headed, and what analysts think of this company overall, to determine if this is a good buying opportunity right now while the stock market either crashes or we enter into a recession. Then we're going to move on and we're going to talk about how Sofi Technologies is actually primed for a rebound according to professionals. After that, we're going to talk about MULN Automotive's solid-state polymer battery partnership with another company which is developing their solid-state batteries, which is absolutely phenomenal news, and I will be giving my opinion on MULN Automotive, which is an electric vehicle company. Then after that, we're actually going to go into why I personally do not own the MULN stock and why I don't think fundamentally or financially at this point in time it makes sense to actually own this company right now, but I'm always open to change my mind if a major development happens with this company in the future. Then we're going to move on and we're going to briefly talk about Amazon.com, because during the stock market environment, doubling down on blue chip stocks as well as ETFs is going to be the smartest thing to do. And then lastly, we're going to go over some Netflix news to determine if Netflix is still a good buying opportunity and if they are positioned to grow well into the future. So we have a lot of stuff to talk about today. So if you want more videos just like this one, remember to go and smash that like button right now. Comment your thoughts down below about Sofi, MULN, Amazon, and Netflix stock. Without further ado, let's jump right into today's story. So if you didn't know, Sofi Technologies is a fintech company or a financial technology company that offers an all-in-one inclusive digital app that offers their customers anything they could possibly need in terms of financial services and or financial products. Currently, the SOFI stock price, which is their ticker symbol, currently trades for around $7, and analysts have price targets for this company that range anywhere between $7 and $22 for the next 12 months, and overall, these analysts have a fantastic buy rating for the company. Right now, the SOFI stock price has been falling. However, analysts as well as other professionals have actually been upgrading the SOFI stock, and they say that it's actually trading at around a 40% discount because their price targets are over 40% from the stock's current price, which is absolutely phenomenal, which could indicate a good buying opportunity, but we'll talk about that more later in the video. Professionals and this particular author also thinks that investors are over discounting the growth opportunity that Sofi Technologies is actually offering investors, and I 100% agree with this author on that particular point. However, it's not wise to overexpose yourself to just one single growth company. Like I always say, I only allocate around 4 to 5% of my portfolio to an initial investment into a particular stock, and this prevents me from being overexposed and taking on unnecessary risk or any unnecessary losses when it comes to aggressive growth stocks such as Sofi Technologies. So, could Sofi stock be a good buying opportunity for aggressive growth investors? Well, I think so, but let's determine why this author also thinks so and why he agrees with me. Well, like we said earlier, the current stock price is trading at around $7. However, the median price forecast according to TipRanks is around $11.88, which again is higher than the current stock price of $7, while on the other hand, Wall Street, like we mentioned earlier, has a $22 price target for this company on the bullish high end. So clearly there are buy recommendations for this company and there are no sell recommendations for this company, which is very positive news. Mainly why the SOFI stock price is falling is because financial and technology growth stocks are being hit very hard right now because of the current bearish stock market environment due to fears of either a recession or a stock market crash. And this is negatively impacting the SOFI stock price on top of very high bearish short interest, which we talked about in other videos, because right now it currently hovers at around a 23% short interest for Sofi Technologies' overall float, which is very, very high. And I would love it if this stock could actually perform a short squeeze, having the stock surge up all the way to around $13 $13 per share according to some sources. So this could be a buying opportunity for aggressive growth investors, which is why this author concludes that SoFi Technologies is indeed a buying opportunity. However, on the bearish side, which is the negative news, they will point out that the company suffers from stock-based compensation, which is true, but they are working on that, and newer growth companies actually use SBC and stock-based compensation to steal talent from bigger companies so they can go into these developing companies and thus bringing in more innovation over the long term. So honestly, this is pretty good as long as they don't do stock-based compensation over the long term. I would say this is completely normal for a company like SoFi to actually implement. Another thing that they're going to bring up is the company isn't profitable. However, this is totally outweighed by the fact that the company is projected to be profitable toward the end of 2024, which is going to act as a fantastic catalyst. Lastly, they bring up how the Biden administration could either extend the student loan moratorium or even have a student loan forgiveness program in general. But like we've mentioned in previous videos, the student loan moratorium has already been counted in SoFi's future projections for this entire year. So although the student loan moratorium is set to end in August, even if it was extended for the entire year of 2022, SoFi Technologies has already included that in their financial projections. So it's really not going to be that bad. So this is clearly an overreaction of bearish negative news, and the positives clearly outweigh the negatives because right now the current valuation for the company is around $5 billion, which means their PS multiple is 5, which is very, very good. So to put this into perspective, normally a strong growth company is going to have a PS multiple of around 10. I normally look for companies that are trading below 10 for their PS multiple, but for a company that is growing as fast as SoFi Technologies, because they have around a 40% CAGR or compounding annual growth rate for their revenues, which is absolutely phenomenal, a 5 times multiple for their PS ratio is very good. Lastly, I want to point out that other companies like Amazon, which we will talk about in this video, Netflix, which again we will talk about in this video, as well as Tesla, always had their bears and naysayers. However, SoFi is still on track to become the Amazon of finance. Lastly, before we wrap up SoFi and we jump over to their technical analysis, I want to talk about the potential of a reverse stock split. So some investors are scared of a reverse stock split, but I honestly don't know why, because a reverse stock split in and of itself really is not that bad. You're just lowering the amount of shares, which is increasing the stock price. However, the equity and ownership that each person or investor owns literally will basically stay around the same. The only reason why reverse stock splits have such a negative connotation to them is that many struggling growth companies do reverse stock splits to increase their stock price so they won't be delisted on the particular exchange that they trade on. However, because SoFi is clearly not doing a reverse split because of that reason, I have no problem with a reverse stock split. However, it could act as a negative catalyst because investors do view this as weakness in the overall company. However, if you look into the company's fundamentals and financials, which we have done multiple times in past videos, the company is continuously growing and they have very strong projections. We just need to get over that hump of the second quarter, and then from then on out, it is a straight shot toward profitability from then on until 2024. Also, I want to point out that from a technical analysis standpoint, the SoFi stock price is trading below their 50-day simple moving average line, and they're also declining past their 200-day moving average line, which means, in my personal opinion, that this is a good buying opportunity and that the stock is clearly trading at a discount. So the bottom line for SoFi Technologies is that for aggressive growth traders or investors, right now could be a good buying opportunity because it could rebound to around $13. However, if that doesn't happen, it could fall all the way down to around $4 per share. So depending on how bearish or bullish you are for this particular company is going to dictate how long you actually want to hold it for. Now, personally, this company makes up around 4% of my portfolio, and I'm going to hold this company for the next 10 years because I think the future projections of this company, and like we said earlier, analysts love this company and they have high price targets and a buy rating for this overall stock. So with that being said, let's jump over to MULN Automotive, which is an electric vehicle EV maker, and they are making a name for themselves because they have taken over the media. So right now, the MULN stock price, which is MULN's ticker symbol, is falling by around 2.69% today. However, the current stock price trades for close to $1.12, while the high-end analyst price prediction goes as high as $23. However, I did its own video on the $23 price target, which I adamantly disagree with absolutely. Also, the overall basis for this company is actually a sell because not many professionals are actually reviewing this stock. However, the only good thing about MULN stock, in my personal opinion, is their solid-state polymer battery cell technology. So we're going to discuss this and who they are partnering with to actually make this a real innovation in their company. So MULN Automotive is an electric vehicle maker, like we said earlier, and the ticker symbol is MULN, and they announced a recent update with its partnership with LGG, who is the company that is helping them create their solid-state polymer batteries. And these batteries are supposed to be included in the second generation of the MULN 5 EV crossover. So MULN and LGG are on track with their existing partnership that started back in 2019. And these solid-state batteries is going to be their golden ticket to compete with heavy hitters in the electric vehicle market. So for instance, the potential range of these solid-state batteries could last up to 600 miles, and they can charge 300 miles in as little as 18 minutes with fast DC charging. The CEO even commented, saying that he is pleased to announce today that MULN Automotive and LGG are moving forward on solid-state vehicle pack level development. He goes on to say that scaling from the cell level to pack level development is a major accomplishment and one I am proud to announce is progressing with LGG as our partner, end quote. So clearly they are making giant leaps and strides for their battery technology, which is going to make them a force to be reckoned with in the electric vehicle community. However, I personally am not bullish on MULN. I do not own MULN, and if I did own it, I would honestly sell it, but I am always open to changing my mind about this particular company if they can impress me with their financials and fundamentals, which right now I am not impressed with because I did a previous video about why investing into the MULN stock right now makes little sense due to their financials. So although the company is an electric vehicle stock, it has a lot of hype behind it, it has noble aspirations. However, in my personal opinion, it's not wise to buy the MULN stock right now. That's not to say that it's not going to be a good buy in the future, it just means right now I am not willing to take on the risk of buying this penny stock of an electric vehicle company. For instance, let me quote an Investor Place contributor who says that MULN spent $3.1 million on research and development in 2021, just 2% of what QuantumScape, ticker symbol SQ, a leading developer of solid-state lithium batteries, spent. Yet MULN's market capitalization is almost 6% of QuantumScape's $5.06 billion valuation, end quote. So what they're doing here is they're comparing MULN, who is supposedly creating very good solid-state lithium batteries, compared to another company, which is QuantumScape, which is also making solid-state lithium batteries, and I've done a previous video comparing these two companies, and I personally think that not only does QuantumScape have better engineers, better technology, and more money at their disposal, but they're an overall better company that can create better batteries. So therefore, if you are bullish on the MULN stock, you should either be very bullish on QuantumScape, or you're going to have to assume that with less money, less overall capital, not as good engineers, and less backing, that MULN can somehow create a better battery than QuantumScape, which I believe is not very realistic considering the current technology of both of these rivals. So I would think it is highly improbable that someone would actually assume that. However, nevertheless, people love jumping on hype trains and just investing into the newest EV stock or the newest growth stock without thinking or doing research for themselves. Now, that's not to say that if you currently have a position in the MULN stock, I clearly cannot see the future. Maybe this will work out in the long run, but I'm getting flashbacks to other companies such as Nikola and other companies of that sort that promised a lot, but they just did not deliver. In the meantime, I'm going to sit on the sidelines of the MULN stock. Always make sure to do your own research. It's totally okay to disagree with me. These are just my opinions. Remember, this is not financial advice. So, talking about that, let's jump into Amazon stock. And I'm not going to talk about a stock split or anything like that. I'm just going to talk about the blue chip stocks that investors, in my opinion, should be buying right now, because during times of uncertainty, you want to really double down on your ETFs and the foundation of your portfolio, particularly particularly dividend stocks are going to shine while the stock market is crashing and or a recession takes place. Right now, the AMZN stock is in a perfect buying position in my personal opinion, and analysts also agree with me, with the current stock price trading at around $2,300, while the low-end 12-month analyst price target is $2,250, and the high-end analyst bullish price target goes as high as $4,655, which is an absolute amazing price prediction. Amazon.com, ticker symbol AMZN, got its start as an online bookseller, but they have grown substantially since then. To put it into perspective, a $10,000 investment back then would now be worth close to around $11.7 million today, and right now they are literally the e-commerce behemoth that we know today, which is absolutely phenomenal. I am a huge fan of Amazon. However, Amazon's AMZN stock price has lost around 40% recently, and with this decline, I think it's a fantastic buying opportunity. However, Amazon is not the only one feeling the negative effects of this overall market. For instance, this Motley Fool article goes on to say that Etsy stock is down 60% this year, and Carvana has lost 80% of its value, but Chewy is 53% off, while Wish.com's parent company, who is Content Logic, is down 48%, with companies like Poshmark also seeing a decline of around 34% in value. Other stocks like Mercado Libre, which I'm a huge fan of, is down 31%. Alibaba and JD.com are down around 24% and 20% respectively. So it's not like Amazon is the only phenomenal growth stock that is trending downward. Now, clearly, I would put Mercado Libre and Amazon above all of these other stocks that I just mentioned, but particularly Amazon is clearly an amazing blue chip stock, and I really don't understand why the stock is experiencing weakness right now, because let's put it into perspective, the company is growing at a phenomenal rate. Its customer-facing business has grown around 23% over the past 2 years, which includes around a 39% gain just in the year of 2020. While Amazon's e-commerce business, which is probably what they're most known for, Amazon's cloud computing operations have actually been its long-term profit maker, and it continues to be true right now. Their Amazon Web Services, which is also known as AWS, has enjoyed a 37% increase from their first quarter revenue of around $18.4 billion, while their operating profits skyrocketed even higher by surging around 57% to $6.5 billion. So clearly the company internally and fundamentally and financially is doing phenomenal. So the stock pullback in the stock price is absolutely unjustified, which is why I think this e-commerce behemoth is an excellent buying opportunity right now, even though we could be heading straight into a recession or a stock market crash. I'm just going to buy Amazon stock. The lower it goes, the better deal that I'm going to get, but I'm going to be smart about this. I'm not just going to jump in all at once. I'm going to dollar cost average every couple of weeks into the company until it starts to climb upwards again. Then lastly, I'm going to talk about Netflix, which is another stock that has been hit very hard lately. If you didn't know, Netflix is a streaming service and entertainment provider, and their ticker symbol is NFLX. Right now, the current NFLX stock trades for around $190, which is below their analyst price target for this year of $217, while the high-end price prediction is $735, with the majority of analysts actually saying to hold this company. However, recently, other analysts have said that the company is going to outperform, and they have actually increased their ratings for the company from a neutral rating to an outperform rating, and they reiterated their price target of around $280 per share, which again is above the stock's current price of $190. They go on to say that the company is positioned to grow very well this year with releases of Ozark and Stranger Things. For instance, the analyst says, "We think that Netflix is positioned to exceed its guidance for quarter two, particularly because of the staggered release date for Ozark." It goes on to say, "While it is possible that the company will once again issue downbeat guidance for quarter three, we think that the staggered release date for Stranger Things will reduce churn. And once again, we think that Netflix is positioned to grow." The analyst again goes on to say that they don't anticipate a rapid change in the company. However, the overall trajectory is positive. So overall, this is very good news for Netflix, which is a good stock that, again, I am buying. So I would love to hear your thoughts down below about the SOFI stock, the MULN stock, the AMZN stock, and the NFLX stock. So I'd love to hear your thoughts down below. Remember to go and build that strong foundation of strong blue chip companies and ETFs. Subscribe if you're new, smash that like button right now, and I'll see you in the next YT video.